What are the experts saying about this market that we're in right now, this home buying market in 2024? This is information you will not find anywhere else. So I've collected the 7 most prominent comments from the experts in housing, and I'm going to present those to you. My name is Tobin Seven. I am a principal real estate broker licensed in Virginia, DC, and Maryland, also an Army veteran and an Eagle Scout. You may want to consider subscribing to my YouTube videos, as I do 2 new videos on information you won't find anywhere else on real estate. Let's go take a look at what the facts are. Let's begin the report. So this is current information for this year, 2024. And in the interest of time, I condensed it to the 7 major points. Of course, my last name is Seven, so there you go. All right, let's take a look and see what's going on. The first of the 7 points is the median days on market. Now, I like to use the word median because that's more accurate. If you use average, that can be skewed with a high number or a low number. But the median days on market this year in 2024 is low. It's lower than last year. So what does this mean? This means that once a home goes for sale, listed for sale, open to the public, it takes 69 days for it to actually go under contract. Now in the DMV, DC, Maryland, Virginia, where I live and I'm licensed as a real estate broker, we're seeing much shorter time periods, but this is for the whole nation. So number 1, the experts are saying we expect this year for homes to sell even quicker than they did last year in 2023. Number 2, there are an increasing number of home buyer assistance programs. I have a good number of my clients who are veterans, military, because I'm an Army veteran, and they use the VA program. There's no down, of course, because the government guarantees the loan. But people who do not use VA loans, conventional and especially FHA, there are an increasing number of home buyer assistance programs, and I would have to say approximately 40% of my clients who are not military, who are not using a VA loan, are eligible, and we get them into these home buying assistance programs. So that's one thing you definitely want to talk to your lender about, your home lender, is are there home assistance programs? And that has really gone up to almost 2,300. And that's the highest I've seen in the decades I've been in the real estate business. All right, number 3. Get my head out of the way, geez. Oh boy. Inventory is rising, but it's still low. Now let me explain this graph to you. When I first saw it, it was a little confusing to me. So in the same week as in 2023, so we're in 2024, in the same week in 2023, there's almost 19% more homes on the market for sale. But if you look at that same week in 2019, 5 years ago, it's down by almost 40%, almost half. Now, why is that? In the DC, Maryland, Virginia area, DMV as we call it, 26% of the people who have a home loan, fixed rate 30 years, their interest rate is less than 3%. I know it's hard to believe, but it's true. And then 47% of the homeowners here in the DMV who are between 3 and 5%. So that's 47%. So it's almost 3/4 of the people in the DC, Maryland, Virginia area have mortgage rates less than 5%. And certainly mortgage rates right now are more than 5%. So we are seeing an increase in inventory. That's what the experts are saying, but it's still low. If I had a home loan that was less than 3% or even less than 4%, I would think twice about selling my home, because you got to live somewhere. And wherever you live, you're going to be paying more in interest rates. You could actually see the situation where you sell your home, especially if it's under 3%, and you downsize because you're older. See the white hair? And you end up with a higher mortgage payment because it's 2.5 to almost 3 times more than what your mortgage rate is now. So that's why it's hard to find people who are willing to sell. So the inventory is low, and it will, I think, continue to remain low as long as we have interest rates in the 7s. Number 4, home prices are going up. Now, you would think, gee, it's getting harder to buy a home, but the whole thing goes about supply. We don't have much supply, and that was the previous slide. So when you have a scarcity of supply, then prices will go up. Now here's an interesting forecast, and let me explain the slide to you. So this is for this year, of course. The original forecast by these various outfits, Goldman Sachs, you probably heard about, Fannie Mae, Freddie Mac, they all buy loans and then resell them in the marketplace. Everyone in this blue area, every one of these, how many do we got here? 1, 2, 3, 4, 5, 6, 7. Number 7 keeps coming up. The original forecast and the current forecast. Current forecast is in green here with the red rectangle around it. Everyone who's part of this group of experts, it does not include me, has increased their forecast of how much home prices are going to go up by. So we thought last year we'd see this price increase, maybe it would start stabilizing. That's not the case. So we're going to see fewer homes on the market because people have low interest rates, and we're going to see higher home prices. Number 5, changing mortgage rates can really impact what you're doing. And before, I've been a realtor for decades. So oftentimes people would say, should I refinance when it goes 1/4 point or 1/2 point? And a lot of people would look at 1/2 point. But right now, because mortgage rates are high compared to what people today are used to. My wife, when she bought her first home before we met, Jimmy Carter was president, and she paid 19%. And then Ronald Reagan came in and rates went down. But historically, the current rates we have now, while they seem high to us, they're in the 7s, are historically not as high as we've seen in the last 50 years. But you may remember what happened to Jimmy Carter with those high interest rates. He did not get reelected. So the 5th thing that we're seeing that experts say is that changing mortgage rates, even 1/8 of a point, is going to cause the market to go up or down as far as people buying homes. So you really want to watch and talk to your home lender about what rates are. Another thing, and this is point number 6, back in 2008, 2009, I was a realtor. There were a lot of homes foreclosed. And that was because it was easy money. A lot of people who did something called stated income. And that's where you'd simply write on a piece of paper, I make $300,000 a year. You'd sign it. No one checked anything. You bought a home. The economy went a little bit worse. Maybe you had 3 or 4 jobs. And then you lost the home and went to foreclosure. Housing underwriting criteria is so much stricter than it was in 2008, 2009. So we're not seeing a lot of homes going to foreclosure. Also, a number of the banks and lending institutions who lend money for home loans are quickly buying these homes back, so they're not on the market as it was in 2008. There was some places I go around and there was 5 or 6 homes under foreclosure in a city block, and that just depressed values, crime, everything. Well, you're not going to see that, and that's what the experts are saying, and I agree with them on that. The last of 7 is, and it kind of flows from the fact that we don't see many homes for sale because existing home mortgage rates are so low for the people who own the homes. So where are people buying homes? You got to buy them somewhere. So we're seeing more people buy newly built homes. Now, historically, I'd see maybe 1 out of 10. My clients, about 1 out of 10 will buy a newly built home. There's some good benefits on that. Brand new. A lot of the new home builders, especially here in the DC, Maryland, Virginia area, give you 1 year, no deductible warranty, wall to wall. That's great. But what they're starting doing recently, and Lennar is one of them, I've got emails from them for the state of Maryland and for Virginia. I actually live in Alexandria, and they're offering way below market rates if you buy a new home with them. And the most recent one I saw, I think, was 5.4%, fixed rate, 30 years. So it's not like one of these 7-year fixed and then a 23-year ARM, adjustable rate mortgage. Now, these are fixed 30 years. And they were also throwing $10,000 at the buyer to pay their closing costs. That's actually a better deal than veterans or active military using their VA home loan benefit. Because the VA home loan benefit, there's no down, but you do have closing costs. Well, if like Lennar in this case, and they're a pretty excellent builder, by the way, my personal opinion, if they're paying $10,000 towards your closing costs, that's probably paying a lot, if not all of your closing costs. So that's pretty remarkable. And right now, according to this data, 1/3, 31% of the people who are buying a home in 2024, a third of them are buying from new home builders. And I can certainly understand why. Last slide. Let me get my head out of the way. My head's always in the way. People always say that. All right, put it up here. It can only go in one of the 4 quarters. So again, I am a principal broker licensed in Virginia, DC, Maryland. I do something because I own the brokerage. I can do whatever I want. I don't have a broker to report to. 25% of my commission goes to you as a home buyer at settlement. And it's real money to you. Or if you sell, it's 25% less than the prevailing rate for selling a home. So this is real money to you. I don't think you'll find anyone else doing this. Check me out. Been around for a long, long time. Again, you may want to consider subscribing because I'm doing 2 YouTube videos on real estate every week. And this is information you will not find anywhere else. So you got my contact information here. If I can get my head out of the way. Put it up here. There we go. So you can give me a call, email me. There's my website. And look forward to talking to you.